The worst phase for foreign flows into domestic equities may soon be over. Analysts believe the quantum of rate hikes by global central banks is likely to moderate going ahead, especially after the US Fed increased rates by 75 basis points on Wednesday. Commenting on the move, Philip Marray of Rabobank International said, US Fed Chair Powell wants to slow down at some point. The FOMC may be thinking of 50 bps hike in September, followed by 25 bps in the remaining two meetings. The slower pace of hikes, in turn, is likely to see flows come back to emerging markets, including India. Abhijit Bhave of Wisdom Wealth, for instance, says, with global inflation progressively declining and the central bank's aggression over interest rate hikes abating, we anticipate that FII inflows would gather steam over the next 2 quarters. However, analysts caution against intermittent phases of withdrawals given macroeconomic developments across major world economies.
From the time that the market peaked in October 2021, in the 43 weeks that have elapsed, FIIs have been sellers for 80% of the time. From the time the fiscal year 23 has begun, it has been mostly relentless selling. June was a ferocious month. July, there was a moderation, and we saw in the last week, ended July 22nd, that there was actual buying. We don't believe it is driven either by corporate results or by the valuation of the Indian markets. We believe it is driven by events in the US. Now, over there, the narrative is changing from inflation towards recession, and which is leading to expectation that the aggressive rate hike of the US Federal Reserve would moderate, and the aggressive taking away of the liquidity also would moderate. If both these events were to come to pass, then there would be a relief rally in the US, and that would also influence the buying and selling decisions of the FIIs in the Indian market. We're already seeing signs that the selling has become much less severe, and in the coming few weeks, if this trend continues, then we can safely say that the worst is behind us. The corporate results have been as per expectation, sometimes better than expectation for the first quarter. For the full year, again, there is a strong expectation. So there is no real reason for FIIs to be selling so aggressively. We don't believe the Indian market is overvalued. We would be keenly watching the events in the US with regard to the interest rate hiking and the liquidity situation over there.
Since October 2021, FIIs have pulled out over $30 billion from the Indian equity markets. However, the pace of FII outflow has slowed in July as compared to the previous months. The Indian markets, meanwhile, saw a sharp drop, with the S&P BSE Sensex and the Nifty 50 slipping around 7% each from their respective high levels seen in October 2021. According to Morgan Stanley, the biggest foreign portfolio investor selling happened in the technology sector, where they have gone underweight during the recently concluded quarter. On Friday, the markets will look to consolidate after a busy week. Stock-specific action will continue amid June quarter earnings season.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.